In the January short-term energy outlook, EIA forecasted the natural gas spot price at the U.S. benchmark Henry Hub will average $4.90 per million British thermal units in 2023, more than $1.50 lower than the 2022 average. EIA expects prices to stay nearly the same in 2024 as dry natural gas production continues to grow in the United States and outpaces domestic natural gas demand and exports for most of the year. EIA forecasts the Henry Hub price will average close to $5 in the first quarter of 2023. Both winter weather and LNG exports at near capacity volumes will lead to greater natural gas demand, which will result in higher prices in the United States. After a warm start to January, we expect colder winter weather to return, prompting higher natural gas consumption for space heating in the residential and commercial sectors, which causes prices to rise. EIA also expects the Freeport LNG export facility in South Texas to resume operations in the first quarter of the year. Resuming export shipments from Freeport LNG will add approximately 2 billion cubic feet per day to overall U.S. natural gas demand, which also contributes to higher first-quarter prices. Natural gas prices are expected to decline in the second quarter of 2023, then stay relatively flat for the rest of the year as a result of winter weather subsiding, reducing domestic consumption, LNG exports remaining flat once Freeport LNG comes back online, dry natural gas production continuing to rise. EIA expects U.S. natural gas production to increase by about 2% in 2023, averaging between 100 and 101 billion cubic feet per day for the year. Natural gas consumption is expected to decline in the electric power sector as more renewable electric generating capacity comes online and overall electricity consumption declines as a result of cooler summer weather than last year. No new U.S. LNG export facilities are planned to come online in 2023. Without new facilities, U.S. LNG exports will not increase. In the first quarter of 2024, EIA expects natural gas prices to increase, then drop below 2023 prices. In 2024, additional increases in dry natural gas production, which will outpace higher LNG exports and slightly lower domestic consumption than in 2023, will put downward pressure on natural gas prices. Dry natural gas production is expected to average more than 102 billion cubic feet per day in 2024. Domestic natural gas consumption will likely decline further, but rising U.S. LNG exports will partially offset the reduced consumption. EIA forecasts that average monthly U.S. LNG exports will surpass 13 billion cubic feet per day by the end of 2024 and continue growing in 2025 as new export facility projects increase overall U.S. LNG export capacity.